It's Tuesday, and we're seeing the markets consolidate after a record run on Monday. Joining me here on the floor of the New York Stock Exchange is Alan Valdes of SilverBear Capital. Alan, thanks for joining me today.
Rami, thanks for having me.
Well, today all focus is on Washington, D.C. Overnight, we did get some talk about what's going to happen today, but of course we did see Michael Flynn resign, and we also saw Mnuchin become our U.S. Treasury Secretary. But today all focus is on what Yellen is saying before the Senate Banking Committee, and so far we haven't gotten any surprises. So what can we expect tomorrow?
You know, you're 100% right. No shocking news out of Yellen today, which we were hoping to get some kind of direction. Nothing, which to me isn't surprising. But tomorrow, hopefully we get a little more direction, know what's going on in their minds down there. We have to wait and see. But, you know, the markets have been doing great. We are consolidating, like you said. But you saw all three index do great yesterday. The S&P went over $20 trillion in market cap, first time ever. Excuse me. So, I mean, it's just been an amazing run here with this Trump train, as they call it. And I tell you, I think it's got legs, Remy. I think we could see this continue. I mean, and it's playing into the Feds. I mean, inflation's picking up. Remember, inflation picks up at the right time. It's good for the economy, so it's good. So I think we're going to have a nice summer. I really do.
And indeed, Janet Yellen did say that she expects to see the economy expand at a moderate pace, and she'll continue to watch the labor market and inflation. Now, we did get inflation this morning; those PPI figures that came in hotter than that came in weaker than expected for last month. But we still have figures coming out tomorrow. So, given everything, have you changed your position on any sectors since the last time we've spoken?
Well, you know, I kind of like all the sectors right now. You know, a rising tide takes all the ships up, and the techs look good, the banking looks good, and we still haven't heard anything on Dodd-Frank and rolling out of those back, but he says he's going to do it, and so far he's doing everything he says. And I like those retails. Retail numbers were a little better. We've seen some of the earnings, so I do like the retail. Again, I think when they roll back the taxes, which he says he's going to come out with, I think either next week or the week after, the first thing people do is go shopping. No one saves. So, I mean, I think you'll see the retail sector do good.
Well, hopefully we'll get more details regarding the phenomenal tax plan pretty soon, and that is expected, as you said. But one thing that we've seen that's been pretty range-bound is oil. Now, on one hand, we have the OPEC production cuts, but we have rising production here in the U.S., and that may be good depending on who you ask regarding energy dependence. Right. But overall, what do you expect to see for oil prices?
You know, I think oil prices are stuck in this range, say 50 to 60. I don't see a big jump anywhere down. You know, you're right. I mean, we're an exporter now of oil. We're energy efficient. I don't see how. I don't see also where the new buyers are going to come from. I mean, right now there's a glut of oil around the world, but I think because of efficiencies, because of more fuel consumption under control, and because of fracking, I don't know. We have enough oil now, and I don't know where the new buyers would come to push the price of oil up. So I think oil stays in this range. And you're right. If you're an oil company, that's not great. If you're a consumer, hey, that's wonderful. So if they can't get oil up in the winter when people use heating oil, then in the summer they're never going to get it. And basically right now, it's going to be March very soon. Days are longer. Heat goes down. So I think overall oil is going to be stuck in this range. We're going to be range bound.